Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, August the 28th, the year's 2023. Let's talk trading. If you think you are right, you are wrong. These videos are for educational purposes only. Your results may differ from mine. You know, I've mentioned more than once that trading is not like baking a cake. And when you're baking, you have your baking plan. It's called a recipe. It tells you what ingredients you need, in what amounts, the order to put them together, the temperature to set the oven to, how to mix them together, etc., etc. And if you follow the recipe, barring unforeseen circumstances, you're going to have a pretty nice cake. Now, in trading, we have recipes, but they're called trading plans. Tells you when to enter, where to enter. Also tells you possibly when to exit, where to exit, the amount or your position size. But the thing is, when you enter that trade, you don't know it's going to be a winner or a loser. That's just one reason for the exit playbook. And the thing is, you analyze the charts, you figure out the direction, and you just know you're right. And then all of a sudden the market goes against you. I mean, it's kind of humbling. And it can cause you to say bad words. In fact, Walmart, he said he had to laugh at me because one of his grandkids was in the room when he and I were on the phone, and he said something like that. Your friend says a lot of bad words. I think I was using the word bastard. And to the little kid, that's a bad word. But the thing is, what causes me to do that? It's because I think I'm right. And I have to laugh at myself. Because when you go back and you look at entries, it's like, well, maybe if you wait long enough, you might have been right. But then again, you might have gone through a whole lot of drawdown just to be right. And exit the trade with a profit. And you know, the funniest thing about it is, a lot of times I put on a position and I add to it a couple times because I'm trying to trade my way out. That first position usually comes out as a loss. And it's like, had I just taken that same size loss, I could have gone the other direction, made money going the opposite direction, and then made money coming back the same way. But, you know, sometimes I'm smart, sometimes I'm stupid. So let's go through the charts. Or actually, let's just look at a couple of charts here. Okay, and you know, this trading chart sometimes can really illustrate certain points. Teaches you patience, waiting for a 3-ball. Because you can see, 3-balls are pretty frequent. And if you just wait for your opportunities, you'll get them. Then you get, you know, 2 balls happen a little bit more. But we had a 3-ball down here. And you can see at the 10% level, could have entered a couple of times. Failed to make a new low, reversed. Between here and here is 5 pips. And then the same thing, failed to make a new low, or lower low. And between here and here is 6 pips. and then it finally shot up. And then here, once again, it went through the 10 level, closed negative. Usually, when I see a closed negative, I like to then go short. If I see a closed positive, then I like to go long. But you have to be careful on those, because they can always go the other way. And once again, that goes back to the whole idea. If you think you're right, you're wrong. Because if I would have thought I was right here, the first thing would have gone against me. So sometimes you have to have something that confirms your trading decision. And so that's why we have triggers, or setups and triggers. So in this case, we have flip-flop boxes, we have indicator 2, we've got state changes. So right now you can see indicator 2 is magenta, meaning it's going south. You can look here. You can see how far away price is from indicator 2. The trade direction and trade bias is, of course, it's going to change because it's dynamic. And you can see here we broke through the flip-flop box. Indicator 2 turned aqua. We've got that one ball just put in. So for me, seeing that one ball means exit, because more often than not, it'll reverse on me. Sometimes you have patience and it'll continue up. Sometimes it doesn't. And this is where I might use that term, bastards. If I exit, then it keeps going in my direction. One of my rules of thumb is, if it stalls, it falls. So if I'm long and price stalls, I usually like to get out if I have a profit, because I don't want to give it back. And one of my other sayings is, or rules of thumb is, it's better to be mad with a profit than mad with a loss. And so you can see here, at the moment, I'd be kind of happy I was out of that trade. So you have to realize that if you think you're right, there's a good chance the market's going to show you you're wrong. But then again, it's a perspective, and how much time are you willing to wait? So see, right now, I would have gone from mad to happy to mad, and that's something you don't want to do, because you don't need to be on an emotional roller coaster. This is trading. And you really want to take the emotions out of the game. So right here we can see we've crossed above the H4 open, or actually we haven't quite. I think we crossed above it. Now we just went below it by half a pip. And we're getting close again. Right there. One more tick and right at the H4 open. And the H1 open also. And we're almost at top of the hour. And you can see price just shot back down. And this is where I would kick myself because I'm making video. I really don't like trading, but I would have liked to have been in that trade and picked up a quick 2 pips. So in that sense, that would have been, I would have liked to take in that trade, that short, because we had the 1 ball, we had a state change, we were at the H4 open, and even though we had a bunch of other indicators that were saying, no, you should go long, I like to trade those reversals and try and make a quick couple of pips. I like to trade across that H4 open because if I ever catch it just right, there's going to be a bucket load or a couple of bucket loads, not a barrel load of pips. So on the way down, I would just try and ride that H4. To make the big pips. And right about now, I might be using that word that starts with a B again. Only because I would be wanting the big pips, but there was an opportunity to pull off, what, 3 or 4 pips just then. And you can see here, if I would have stuck with my normal, I saw the 1 ball, just exit, because you saw what happened. It reversed. And now it's going back the other way. And would have been able to take another short within 1 pip of that open. Coming back the other way. It failed. I believe this failed to close above the open. So it's just like, okay, let's see what happens. Because if you think of every trade as an experiment, as in, let's see what happens, and you don't really have a lot of emotional capital invested in the trade going your way, you might have real capital, as in money invested, but it's the emotional capital that you really don't want to lose, because then almost all bets are off because you won't be making good decisions. So you go, let's just see what happens. Oh, well, that one didn't work out. Hit my stop within my parameters, so that's just part of trading. But if it does work out, once again, you could be walking away with buckets or pails or wheelbarrow full of pips. I have to apologize. My allergies are kicking up, so if my voice sounds slightly different, that's why. And you can see here we've got a couple of, got the outside bar, a couple of inside bars. So either way it breaks, it could break big. And you can see here we've had an outside bar, but we still haven't had that big break. Here we had an outside bar, and you can see we had a nice break to the upside. So, fellow traders, we're going to revisit this probably for the rest of the week. And so when you're trading, remember, if you think you're right, you're probably going to be wrong, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.